Is it better to live at home or move to assisted living? We weigh the options. Then we delve into alternative investments. Can they enhance your returns? And the age-old question, a house or a condo? All this and more coming right up on The Wealthy Life. Welcome to The Wealthy Life. Would you prefer to live at home as you age or move into assisted living? Joining us is home care expert Stacia Hartley to discuss what to consider. Stacia, welcome to the show.
Thank you, Sybil. Thank you for having me.
So you've worked in healthcare management your entire career, essentially.
Yes, I have.
I'm sure you've seen a few things.
Yes, I have.
What are some of the common situations you see most often?
Well, we're talking about home care, and we're talking about caring for people in their homes. And I think for us, when people phone us, they're often, concerned about cost, but they're also concerned about who's coming through the door and who's looking after them, and do I really need care? So those are sort of the common situations that we deal with when we're starting the journey with someone on home care.
Yeah, and I think no one likes to admit that they need a little help. That's probably step one challenge to overcome.
There's some who love the companionship and they're very open to it, but there's others who are relying on family and they think that's good enough. They don't think that the family is doing more than they should be, but often it becomes something that just happens and it really grows on adult children. And so those are often the calls we get, is the adult child saying, can you help us?
I need some help.
Yeah,
I've got my own family and kids and
Yes.
work to do, and I want to make sure my mom or dad is taken care of.
Yeah, they want to be a daughter or a son,
Yes.
not a caregiver, and that's something that is hard for them.
So what is the type of care that people usually start to need first, and where does it go from there?
Yeah, so sometimes it's just really help around the home. They're not checking the fridge and the expiry dates. They're not cleaning. Maybe their eyesight isn't as good as it used to be, or they just don't really care anymore about that. So the family notices that the home needs a little bit of help. So that's where the basic home support comes in. But there's also the personal care. So they start to be maybe afraid to get into the shower by themselves, but they're afraid to ask for that help. So having a shower assist, having somebody stand by is, and when it's not family, maybe it's more acceptable.
Right, but you have to plan all of that well in advance, and it does cost money. What does it typically cost to hire care to come in your home?
Yeah, so for private agency, so a private caregiving company, you're typically looking at $38 to $42 an hour. And usually there's a 2 or 3 hour minimum, and purposeful, because we want to get to know the client. We want to get to know their routines, and there's companionship involved in all of that. So whereas with government care, you might just get 15 minutes or a half an hour, and that's the care you get.
Okay, so tell us a little bit more about the difference between government care and private.
Right. So government is there for what you absolutely need. There is an assessment that goes with it, and so you have to be approved for government care. And it's typically very task-based, medication assistance, shower assistance, putting the compression stockings on.
They're not going to stay around to chitty-chat for 45 minutes or an hour and a half to fill that companionship
That's
need.
right. And you better be ready when they come through the door, because they've got 15 minutes or 30 minutes assigned. So that has its limitations. Governments give you what you need. Private care gives you what you want, which is to shower when you want to shower, or to have your type of meal, maybe a home-cooked meal, that sort of thing.
But at least for those people who can afford private care, it's probably the better option, but those that can't, they're not left hanging.
Exactly, and I think that's one of the great things about our country, is that we do have government care, and it is there for you when you need it.
Now, how about the family member that needs a little help but doesn't know they need a little help? They maybe disagree.
Yeah, so we will try the opportunity to say, we're just coming in to help you around the home, vacuuming, that sort of thing. And what can happen, and often does, is they start to develop a relationship, because we have consistency of caregivers. So that caregiver gets to know and chat with them, and oftentimes they'll admit, oh, I'm not really bathing anymore, or something like that. And then they'll be happy to have that person also help them in the shower. So build a relationship.
So that's good. The benefit of going through maybe an agency is you do have consistent care
As much as we
workers.
can. It depends on how many hours you're purchasing, how often, but that is the goal, is to keep the team very small so that the client, the person in their home, gets to know a couple of people that can look after them and know their routine.
Now, what if someone decides to hire directly themselves? They just answer an ad in the paper. What are
That
the
happens
risks
a
of that?
lot. It does happen a lot, and there is a risk. Most well-intentioned people, they're coming in to help you, but there is no oversight. That individual is now in your home. You're paying them directly. What is their qualifications? Do they have they had a criminal record check and a vulnerable sector screening? And is there clinical oversight? Because increasingly, the people at home, the people that want to stay home, are having more problems. And so it's nice to be able to have a nurse to refer back to say, this is starting to happen in the home and what can we do about it? So
yeah, I think the oversight is really critically important, especially with the rise in cases of elder abuse, which actually, unfortunately, stats show that most of the elder abuse actually occurs with a family member.
Yeah.
So maybe there's another benefit of having a non-family member come into
Well,
the house.
there is to that too. Having somebody else and another, having a couple of eyes on the client, because it's not just the caregiver. We do have a nurse who's assessing the situation, ensuring that the caregiver is competent. We have a scheduler who's talking to the client, and sometimes they get information as well when the client gets used to talking to their coordinator.
So one final question for you. At what stage does it make sense to then leave your own home and move into a care facility?
Yeah, and that's really an important piece, is when the care becomes so great or so complex, or the risk to the employee becomes too much. Really, that is when the time for a care home is an alternative and should be considered. And we really try to help families support them in that decision and let them know when that time is.
Seja, thank you so much for this great information. It's been a pleasure having you here today.
Thank you for having me here.
And don't go away. We'll learn how alternative investments can enhance your returns after the break.
The Wealthy Life is brought to you by investment dealer Raymond James. Life well planned. See what a Raymond James advisor can do for you.
And welcome back. Do you know what an alternative investment is? Sounds interesting. Should it form part of your portfolio? Joining us today is alternative specialist Emma Querengesser to discuss the pros and cons. Emma, welcome to the show.
Hi, Sybil. Thanks so much. I'm happy to be here today.
So there's been a lot of talk about alternative investments. What does that mean? What are they?
So an alternative investment is really any asset class that falls outside of the traditional asset classes of equities, fixed income, and cash. And really an advisor is going to incorporate alternative investments into a portfolio to more fully diversify that portfolio and optimize the portfolio for the clients. So when you look at a traditional balanced fund, which is typically 60% equities or 40% fixed income, an advisor will reduce some of the exposure in either of those buckets to fully incorporate alternative investments to better diversify. And so there's a number of different types of examples of alternative investments that some investors and viewers might be familiar with.
Yeah, share with a few.
Yeah, so a few of them would, for example, owning your own home or investing in a private apartment building that generates rental income would be an example of an alternative investment. Or including a hedge fund strategy that may short securities or use leverage to enhance returns would be an example of another one.
Okay, I'm going to pause you there for a moment. Hedge fund, not everyone knows what the term hedge means. Can you elaborate?
Yeah, so it's a great way to say a hedge fund is something that looks like a mutual fund or ETF that can often utilize publicly traded securities like stocks and bonds, but in a non-traditional manner. And each hedge fund may incorporate different allocations to fixed income and equities, but they'll utilize those investments in a way that has a different mandate than a traditional buy and hold or long-only portfolio.
Okay, so for example, one investor may invest in the stock market in Canada, thinking the market's going to go up. But another investor maybe thinks the market is going to go down or wants to protect themselves or hedge their investment in a downfall. And then maybe they would invest in a hedge fund that maybe would short stocks to give you the opposite benefit of the market.
That's absolutely right, Sybil. So that's what we'd call a long-short fund, where they may have a certain percentage of that fund be exposed for market securities that go up in value, but they also want to take advantage of securities that go down in value, and that helps smooth out the return.
Which makes sense. So other than hedge funds and some of the other types of alternative investments you've spoke of, anything else come to mind?
Yeah, there would be a few others. For example, anyone that's investing in commodities, maybe including that in the portfolio to hedge against inflation or protect from rising interest rates. If you have exposure through a professional money manager to infrastructure assets, that would be an example of a alternative investment. And then there's other ways to generate different sources of yield through alternative lending, and that would be an example as well. So there's a number of benefits to including these in investor portfolios that can help to fully diversify a traditional balanced fund.
How risky are alternative investments?
So that's a great question. I get asked that a lot. I think there's a lot of misunderstanding around the term alternative or hedge fund and being associated with risk. A lot of them will certainly actually be utilized to mitigate risk and diversify and lower volatility. So I think there's a number of there's a number of benefits to owning alternatives, but they certainly, like with every investment, have their own set of risks. And that really needs to be taken into consideration when you're allocating to this space.
Right.
So some of the risks that can be that can be present in this asset class would be the risk of loss through leverage or through short selling. But a lot of the times this can actually enhance returns and protect risk too. So there's unique differences between alternative investments and traditional mutual funds or ETFs that one needs to be mindful of. But not all of them, I would say, when integrated into a well-diversified portfolio, actually present additional risk to the portfolio.
Right, but that's the key point, is when forming part of an overall diversified portfolio, it may reduce the portfolio risk, but when looked at independently, it may actually be higher risk. And one of the other common risks that people need to be aware of, I think, is liquidity. Is it harder to sell an alternative investment?
Absolutely, and it completely depends on the strategy and the manager and the terms of that investment that you're looking at. So while historically a number of alternative investments have had lower liquidity, we also have a new form of mutual funds in Canada called liquid alts, and many of these have daily or weekly liquidity and actually have very similar structures compared to traditional mutual funds, but actually have a more enhanced ability to execute on strategies that can help optimize the portfolio. So while there are some that are less liquid, which means they're invested in securities that don't trade on a publicly traded exchange and may not have a readily available market, there's a number of strategies that do not fall into that category as well. And it really depends on the client and their what would be a good fit for them at the end of the day.
So Emma, what's the one question our viewers should ask before taking action?
I think they should ask to speak to their investment advisor to learn a bit more about this asset class, because it does come with challenges but a lot of interesting things to learn, and they're the best place to start.
Emma, thank you so much for being with us today.
Thank you so much, Sybil. It's been a pleasure to be here today.
And stay tuned. We'll learn how to make money in real estate when we return.
The Wealthy Life is brought to you by investment dealer Raymond James. Life well planned. See what a Raymond James advisor can do for you.
Welcome back. Which is the better real estate purchase, a house or a condo? Real estate advisor Dean Innes of Sotheby's is with us to share what you should consider before investing in real estate. Dean, welcome.
Thanks, Sybil. Great to be here.
Well, why should people invest in real estate in the first place? Is it a good idea?
Well, I think so. What did Mark Twain say? Buy land, they're not making it anymore, the famous quote. And obviously he wasn't wrong. There was a study done in the US a couple of years ago, and it determined that 90% of the world's millionaires had arrived there through real estate investment and property ownership. So, don't take my word for it, take the millionaire's word for it. So,
yeah, and I think real estate, it's tangible. Everyone needs a place to live. You can see it, touch it, feel it, which makes it a little bit more fun, and you get to decorate it.
Yeah,
everyone loves decorating.
And it's not going anywhere. And in places like metropolitan cores, they're not making any more of it unless it's condos that are going up. So as the demand grows and the supply diminishes, the values go up. So
let's talk about the differences between houses and condos. Is one better than the other from an investment perspective?
Yeah, I'm a fan of condos for real estate investing, just simply because it's a lower entry point for price point than a single family home. Let's just say you're in a market where a single family home is $1 million, a condo might be 500. So it's a less of an investment, and it's just easier to manage. Yeah, there's lower maintenance. You've got a property manager that's taking care of it through your strata fees. So it's just easier. You can put a long-term tenant in. Maybe it's zoned for short-term vacation rentals, then you can do that. So it just gives you more flexibility, in my opinion.
Okay, so let's talk a little bit more about the different types of condo properties then to buy, because you touched on a few.
Yeah.
So if you want to do it as an investment and rent it out, what are the different rental options you can consider?
Yeah, so I like steel and concrete condos down in a city core or a town core, simply because the demand is usually higher there for rental, so you can usually charge a bit more as far as your rental rates go.
Okay, so location does matter?
Yeah, I believe so. I mean, you're going to pay a little more to be in the central locations, but I think in the long term it's going to pay off as far as your equity gain. And as far as the types, yeah, you can put a long-term tenant in there on a 2 to 5 year lease, or if it's zoned properly for vacation rentals, you can potentially even gain more income from it by operating it as a short-term vacation rental like an Airbnb. Okay,
so before you buy a condo, you need to look into this. How do you find out what the zoning is?
So that's where you need a real estate advisor that you're working with, whether it's and they're somebody that knows the market for that. There are condo specialists, but usually those of us in the real estate industry, we deal with single family homes, condos, kind of across the board. Yeah, and it's our job to investigate that for you, find out about what are the restrictions on the building? Or do they allow kids, pets, rentals? Is it zoned for short-term vacation rentals? That type of thing. So that's your real estate advisor's job.
Now, in terms of long-term average appreciation in market value, condo versus home, are they comparable?
Yeah, it depends on the market, but I think single-family homes probably would be further ahead as a general rule. But with a condo, as I say, it's lower maintenance and lower sort of hands-on requirement for you. I mean, not everybody's a handyman that wants to be getting called from their tenant to fix the washer and dryer, or they got a leak in there or whatever. The strata management company, in those cases, the property management company takes care of a lot of that type of stuff for you. So I just think it's a just easier, like hands-off investment.
And how about monthly fees? I mean, you've got to pay strata fees with a condo. Correct. You don't have to do that with a home, but there's other costs associated with the house purchase.
Yeah, so with condo, you're looking at your mortgage costs, you're looking at your property taxes annually and your monthly strata. But I tell people, don't get too wound up about if you even have to subsidize it a little bit per month. If you have to subsidize a condo investment, say $200 per month, $2,400 per year, but if you're in a market where the market's going up 8 to 10% a year, and that $500,000 condo maybe went up $40,000 to $50,000, well, you'd spend $2,400 all year long to make 50. So
absolutely. Yeah. So it's a couple of things. It's like a forced savings program.
Correct.
So even if you do have to fund a little bit, it's still probably worth looking at. And down payment, how much should you put down?
Yeah, so most of the lenders for investment properties require 20%. So again, if you're trying to get into, barriers for entry on a house, you're going to need, on $1 million house, you're going to need $200,000. On a condo, $400,000 or $500,000, you're going to need $80,000 to $100,000. And if you don't have that, people say, well, I don't have $100,000 sitting around waiting to invest in a condo. Maybe you're a homeowner. Maybe you own your principal residence. Maybe you can leverage against that and take out a home equity line to fund that down payment.
Right. So maybe tap into some of the capital you've already built up in your own home to then purchase a second property.
100%.
Okay, and borrow to invest. How about rent? How do you know what to charge for rent?
Basically, it's just homework. You just, you go on the websites and
Craigslist, Kijiji,
all that, and you see what one bedroom, one bath condos in the downtown core are going for. Does it have parking? Doesn't it have parking? And then you kind of gauge your rents off of that. But you can usually arrive at a pretty accurate figure pretty quickly just based on the numbers that are out there.
And if you really don't want to do any work, you could even look at hiring a property management company to run it for you.
100%. And that's where I think where the property management company comes in is if you're thinking of operating it as possibly like a vacation rental. Property management company is going to take about 20% per month, but they're likely going to net you out a larger amount than if you just try to do it yourself month to month. So it's just, but again, it depends on the zoning. It is allowable for that.
Yeah, vacation rental may put more money in your pocket,
Yep.
but it's more work,
Yep.
and you may or may not be allowed.
Yeah, correct.
Dean, thank you so much for being with us today.
Great. Always great to see you, Sybil.
And when we return, find out if you can afford a retirement home after the break.
The Wealthy Life is brought to you by investment dealer Raymond James. Life well planned. See what a Raymond James advisor can do for you.
Welcome back. Thanks for your letters, emails, tweets, and messages. Today's question is from Jared. Dear Sybil, I'm turning 60 and about to retire. My pension is enough to live on, and I own my own home, no debt. I'm concerned about the cost of potential future care needs. Will I be able to afford a retirement home when the time comes? How do I know if I have enough? Sincerely, Jared. Well, Jared, good for you for planning now, thinking ahead. You'll be prepared for anything that comes your way. The cost of moving into a care home really depends on your needs. If you're pretty independent living, it may be as low as $2,500 or $3,000 a month, all the way up to $10,000 a month or more if you need full-time care and medical attention. Now, there's government funded and private funded. The good news is, for those that don't have enough money, the government funding cost is based on a percentage of your income. Now, you're in a good position because you have pension income and you own a home. If you needed to move into a facility, you could sell your house, reinvest that money into an investment portfolio that would generate some income to top up your pension need and should be more than enough to cover the cost of your care. Still unsure? I suggest you look at some of the care home facilities in your area. Go in, have a look, see what it would be like to live there, and find out what the costs are. Then work with a financial advisor to make sure that you do have enough income to cover those costs. And of course, if you have a little bit of extra cash flow right now, maybe consider putting some of that aside. Save a little bit of your pension income for those future care needs should you need it. Hopefully that helps answer your question, and maybe you won't need care at the end of the day. Better to be prepared than not. And that wraps up this edition of The Wealthy Life, helping you make smart financial decisions. Join the Wealthy Life Club and you'll get access to everything you need to live your version of the wealthy life.